Hi there. Nikola has reported the results for the first quarter 2024. And the stock price is still down 30% year to date. It was a little bump in the past, but then it went down. Now, when you look at Nikola, its opportunities, you can see that they plan to expand their deliveries, their network, and so on. Plus, they also have government support. And when you look at their opportunities, and of course, what the market expects, the analyst estimates, you can see that the revenue is expected to grow a lot in the future, from a few million to over 4 billion, that's a lot. And also, Nikola may become profitable. This is what the market expects. And when you look the valuation based on the analyst estimates, you can see that the market cap can go to 7 billion, 13 billion, or 3 billion, almost 4 billion. And now, as you can see, the market cap is about 700 million. So you can easily have more than a double from this investment, even more than 10x, if Nikola keeps improving its operations, becomes profitable, and they continue to grow. That can easily happen. But you also have to be aware of the risk, because there are more risks with this company. Not only focus on the reward. To look at the market size, there are opportunities for hydrogen trucks, as you can see. It is expected to grow a lot in the future. Compound annual growth rate over 40% from 2024 to 2033. This is an amazing growth rate. So now let's look at the latest results. As you can see, they deliver 40 trucks in this quarter, Q1 2024. They want to expand in new markets like New York, also to expand their HYLA network for hydrogen refueling stations. For instance, they opened a station in Ontario and also in Alberta, Canada. And they plan to open more stations this year, around 14. Plus, they also see opportunities in constructive green policies, so they'll get more government support, and that's a good sign, because people are likely to buy the trucks as they get more incentives from the government. That's logic. And if you take segment by segment, you can see that hydrogen fuel electric trucks, they deliver 40 trucks, as I said at the beginning. Then, on the energy side, as I said, they open 2 stations for refueling. They expect to provide 9 hydrogen fueling solutions by mid-year 2024 and 14 by year-end 2024. So they want to expand their energy network to offer more stations so that the drivers can refuel their trucks. And that is good, because if they build that infrastructure, drivers or other fleets are more likely to buy their trucks, as they have access to their infrastructure to refuel their hydrogen trucks. So this is more like a strategic investment. Don't think that they will make a lot of money from their network, because it requires a lot of capital. But maybe they will be able to sell more trucks, which can deliver a profit in the future, as the analysts expect. Now, as I said, they also have government support, new green policies, and there are all kinds of programs, plus others may occur in the future. And they also offer battery electric truck. They completed the first delivery of remediated battery electric trucks in Q1. So that's good that they're also trying to expand in this segment of battery electric trucks, which may increase their revenue. Now, when you look at the results, you can see that they produced 43 trucks in Q1 2024 and delivered or shipped 40 trucks. So when you look at the deliveries or shipments, you can see an increase from 41 to 40. And that's great. But when you look at the revenue, you can see a decline from 10 million to almost 7.9 million. Also, the loss from operations has increased from 127 million to 145 million, and this is bad. And their net loss has decreased just a little. So overall, this business seems that is improving, but when you look at their numbers, the fundamentals, you can see that they are not profitable yet. And when you look at the analyst estimates, you can see that for 2024, it is expected another huge loss, over 500 million. For 2025, the same thing, and 2026. And only in 2027 and 2028, Nikola may deliver a profit, positive earnings. And if that happens, the stock price will go up. Of course, there is also risk, because if you look, let me show you something important. At the number of shares, compare Q1 2024 with Q1 2023, you can see here the average shares outstanding. They increased from 549 million to over 1.335 million. So they more than double the number of shares. This means when they issue more shares, investors lose in value over time. And that's why you have this huge decline in the stock price. I hope you know what dilution means. If you don't know, please let me know in the comments and I'll explain it to you in simple terms. So, as they need a lot of money to invest in their infrastructure, especially Highland Network, energy segment, also to build their platforms for manufacturing their trucks, they will need a lot of funds, a lot of money to expand their business. And as they don't have any profits, because this business is not profitable, has not become profitable yet, and they can raise more money by taking on more debt or to issue more shares to raise money from investors. And when they do that, they issue more shares and you lose in value over time, because their final profits, let's say they make 600 million in profits. If now there are, for instance, 100 shareholders, that 600 million is divided by 100. So every investor gets 6 million. But if they double the number of shares, this means that there are more shareholders, 200. And then you divide 600 million by 200, and then every investor gets 3 million. This means the value has decreased from 6 million to 3 million. In this case, 3 million. That's why you have to be aware of dilution. As I said, if you look at my research, you can see that the first risk is dilution. You can also see here. The number of shares has increased a lot, from 260 million to over 1.3 billion. And people are wondering why the stock price has declined more than 94%. The main thing is dilution. And of course, a decrease in their revenue, higher losses, and fewer deliveries, as you can see here. Now, the good part is that they have some cash on hand, about 345 million and 9 million in long-term deposits, plus restricted cash about 31 million. So in total, they have almost 400 million. If you look at the market cap, that is half of the market cap, something like that, approximately. So they still have some money to survive, because when you look at their loss from operations, they're over 145 million. But be aware that this amount, the cash on hand, will decrease over time, as you can see from the previous quarter. From Q1 2023, the cash on hand was 464 million, and Q1 2024, the cash on hand was 345 million. So this amount is decreasing over time, as they have more losses. They report higher and higher losses. So they are burning a lot of money to invest in their infrastructure and fund their operations. So if you are planning to invest in this company, because as you've seen, they have huge opportunities, as I said, a compound annual growth rate over 46% from 2024 to 2043. The market is expected to grow from 4 billion to over 18 billion. This is a lot. If they can expand this business to gain more market share, reduce their losses, then this company will do well over time. Plus, they also might get other government incentives from Biden administration or the new administration that may come. In the past, they had some cash, but of course that amount has decreased. And of course, you also have to be aware of their debt, which might become a problem in the long term if they don't become profitable. So their current debt is about 268 million, and you have to be aware of this debt. Now, another thing you have to be aware of this business is that they are likely to deliver low margins in the futures. Because as this business requires a lot of capital to invest in their network, their energy infrastructure, plus to manufacture those trucks and sell them, these businesses are likely to have low margins in the future. Even though the revenue may go to over 5 billion, their margins will be quite low. You can see here, their gross loss is with minus. Another risk is that they might not succeed to become profitable. Nikola may not become profitable in the near term. And if that happens and they face other problems, lower sales than expected, then they may go bankrupt. And that's why you have to be aware of the risk. When you look at the analyst estimates, based on what they expect, you can see that the risk based on this valuation is not high. But you have to be aware that if Nikola doubles again the number of shares, these estimates, these valuations are worthless. Because as I said, you divide their earnings by more shareholders. And the more they are, the lower your profits are. That's why this valuation is based on the current shares outstanding. If they increase more in the future, then the valuation will be much lower. And this is the main risk with this company. Dilution, not becoming profitable, and of course, bankruptcy if they don't do well in the future. So if you do want to invest in this company, you have to be aware of the risk. If you like it and focus on the reward, maybe the stock price will double or more than double in the next 5 years. So it's a risky investment, and that's why you have to be aware of the risk and also on the reward. You might make some money, but the risk is to lose all your money. So that's it for this video, and if you have other questions, please let me know in the comments.